Hello and welcome to Crypto Weeklies. Today let's talk about AIOS, one of the Depin or decentralized physical infrastructure related crypto related to Web3 and AI, and conduct machine learning based price forecast and regression analysis and accumulation analysis for AIOS. None of the content is financial advice. Right now, AIOS, I think, per its tokenomics, it's ranked number 112, but by volume at around 600. But in terms of the circulating supply and total supply, they are both hand in hand. Does not have a max supply. At both circulating and total supply at around 1.1 billion, price at around 52 cents. And if you were to conduct price versus market cap analysis, you can see that prices at one point were at around $1.90, although at that point the market cap was sufficiently lower or significantly lower than what it is today. That means initially when the token was launched, although the price was high, market cap was low. That means the number of circulating token in circulating supply was less than the significantly less than the total supply. Right now, if you focus the attention over the last 1 year, you can see that the market cap growth and the price growth are essentially the same. That means as the circulating supply matched the total supply, the growth in market cap started reflecting fairly in the price. So this is a good sign. Let's go to the machine learning based price forecast. None of the content is financial advice. This is again the weekly price action of AIOS, just what we saw over here on coin market cap over a weekly time frame, from the $1.90 all the way back to less than a cent before the October rally kind of took off, with one of the popular narrative being AI and decentralized physical infrastructure. AIOS again, one of that narrative is again a deep in for Web3, AI, and storage and streaming, decentralized computational sharing and storing of resources. So that's where this crypto kind of gained proper popularity from 1 cent all the way to about 86 cents. That would be again that would be exactly an 85x from the October lows, from bottom to low, bottom to peak, inside 6 months from October to March. So now where are we per the machine learning based model? The base case is forecasted is between that is the pink line, that is between 53 cents till about 80 cents between now and February of 2025 at a base case level. That means if there is no significant crash or significant rally, that's the neutral case forecasted by the model. If the market and the crypto market and this particular AIOS crypto takes part in that market, both go hand in hand with the market rally. The bull case is at around 70% confidence level, is at the yellow line between 63 cents all the way to about $2 or almost $3, between 63 cents and $3 between now and end of February, beginning of February 2025. If on the other hand the token and the market witnesses a crash, the price could see as low as between 20 cents and about 45 cents between now and February 2025. The purpose of this analysis is not to tell what will happen tomorrow, that is, if the market will go up or down tomorrow. That is dependent on several factors which are outside the scope of this analysis, such as macro environment as well as particular crypto related growth or lack of growth. So those are the factors that would decide. Also the investor sentiment, their purchasing power, other competition. So these all are the factors which would determine the price analysis or the price, what price will do tomorrow. But the purpose of this analysis is not to go into that detail whether it has to go up or down, but if it were to go up, what are the key levels to watch, how high can it go, if it were to go down, how low can it go. So basically being prepared for all the three scenarios. And if you are interested in week by week analysis of what these cases look like, the base cases is over here in the middle, the column which is labeled base. To its left are the three bear cases at 1, 2 and 3 standard deviation, and to its right are the bull cases at 1, 2 and 3 standard deviation. That is 68% confidence, 95% confidence that the price stays under this, for this exam for this week, 95% confidence per the model that the price cannot go beyond 73 cents, 73.78 cents, and 99.7% confidence that it cannot go higher than 86 cents. So that's how to interpret these forecasts. In terms of analyzing what AIOS is right now doing on its regression based growth. So this is the polynomial regression based growth analytics wrapped around the weekly price action for AIOS, and the polynomial regression function at its fair value, it's at around $1.08. So that almost $1.08. That means right now the price is almost 50%, almost exactly 50% of the fair value at 54 cents. The key valuation to look for is the 55-cent level, which would correspond to this 1 standard deviation floor from the fair value. So let's consider this pink line as the fair value. On top of the pink line are the 3 lines to the upside, which are the 1 standard deviation peak, 2 standard deviation peak in orange, 3 standard deviation peak in red, and similarly 3 bottom lines or 3 standard deviation valleys, 1 standard deviation valley at the green line, which is at 55 cents, that is the light green line. The dark green line at around 28 cents, that's the 2 standard deviation bottom, similar to what AIOS witnessed the 2 standard deviation bottom at around 1 cent back in October 2023, and the 3 standard deviation bottom coming in at around 15 cents. So again, to the downside is the 28 cents if the market were to go down, to its mean reversion rally to the upside is at around $1.08. So that's where those are the 2 key levels to observe at this point. And if in the future the crypto were to rally and go back to its 2 standard deviation ceiling, that usually happens during the mania phases of the market, that level is at around $4.15. So that is one indication of what it could do if the market were to go back into mania mode, like the market did in early February, March of 2023. One way to analyze this is again looking at the overall market. This is the Sharpe ratio. This is the risk analysis where the market is currently on its own. That is the top 100 cryptos by market cap, what they are doing on their risk journey. If they are close to the peak, this is normalized between 0 and 1, and they are exhibiting this highest risk or the red color on their individual collective risk journey as the market goes into the mania mode. Right now, as you can see, in month of September, there have been 2 phases essentially. The down till about September 7th, when the risks were going sub 0.15. Now they are in a recovery mode, you can say, since the first week of September. The risks have gone up from 0.14 to 0.21, and again marking this yellow territory, which is the moderate risk. The way to interpret this is again not financial advice. When the color is blue, that's the lowest risk. The green is again the second lowest risk. These are the 2 levels where DCing makes most sense in the market, and the opposite is the orange and the red risk, which is DCing out of the market makes more sense based on historical data. Right now we are in this middle band, that is again since the last 3 to 4 days, the moderate risk or the yellow neutral zone. In terms of now evaluating some of the models for accumulation for AIOS, the first is the shorter term model based on the proportional distance between the price and 20 week simple moving average. Per this model, the likelihood of mean reversion trade at 37 cents was at around very high, that again when the risks are low, that is between 0 and 0.1, that's where you can see that the token has exhibited decent short-term mean reversion rallies. So that's we're just off of that level. In terms of the dollar cost average or DCA model, which looks at the proportional distance between the price and the fair value regression line for AIOS. This is Jasmine for AIOS, and this is all of the charts are available for most of the top 100 cryptos by market cap, not just AIOZ. So, and you have to, the only thing that you need to do is visit cryptoweeklies.com on the bottom of your screen. You don't have to sign up or pay for anything. All of the content is available for free, gets updated every single day, personally curated by me. In terms of the risk levels, right now, to accumulate risk, accumulate AIOZ at 0.04 risk, again, one of the few best time to accumulate AIOZ per this model. Again, not financial advice. What this model does is compares the price of the crypto and the fair value regression line, and based on the proportional distance, the risks are normalized between 0 and 1. 1 is highest risk, kind of a signal where to get out, as the, you can see essentially this dotted red line. If the price is trading above this dotted red line, it's kind of a early signal that okay, this is the time to get out, or at least stop DCing, because the market is overheated. Similarly, when the risk levels are sufficiently low, that is again right now between 0 and 0.1, that is a good signal from this model that the price can go down, but again, the likelihood, if the token survives, there is a rally in store. So that's the DCA model. For this model, it's one of the decent time to DCA crypto. The other model, the last model, which is the time weighted average price model, this model is saying that although the DCA model has exhibited some low risk environment for AIOZ, the time weighted average price risk is at around 0.62. That means this is because the time weighted average price for AIOZ is at around 26 cents. The current price is again more than 2x from this 26 cents level, and whenever the price is above this time weighted average price, the best deals are not basically saying that this is not the best time to DCA AIOZ. The best time to DCA was when the risks were essentially zero throughout January 2022 till about October 2024, October to January 2024, sorry, October 2023 to January 2024. So that's where the time where the time weighted average price and the price of the crypto was close to each other. You can see this purple line meeting this blue line. So all in all, the time weighted average price saying not a great time to DCA. The DCA model, based on some of the peak ceilings, based regression valuation at around $3, saying a decent time to DCA. A regression based valuation saying price close to the 1 standard deviation bottom if there is a mean reversion trade going back to $1.08. Last but not the least, the AI based price forecast saying decent thing at the base case level between current price at around and around 70 cents with 80 cents between, that is the base case. The bull case between 63 cents all the way to about $3. The bear case between 20 cents and 45 cents. So that's where we stand with AIOZ. Hope you enjoyed the content. If you did, please subscribe to the channel. Also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.